Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on dollar CAD, silver, gold, Brent crude, and WTI crude oil. Just a reminder that these videos are intended as educational. We are only observing current market conditions, and these are not to be considered as trading advice. We can see that the last 2 days of price action have been quite bullish in the crude oil market. Why is that? Inflamed geopolitical tensions between the US and Iran are raising fears of possible supply disruptions, especially around the Strait of Hormuz, which is a major oil transit route. There is a buildup of US military assets and faltering diplomatic progress, which has affected the perceived risk of conflict. And US crude oil inventories fell more than expected, tightening the near-term supply backdrop. We can see from today's inventory report that supply was down by 9 million barrels, which contradicts the forecast of an increase of 1.7 million barrels. If you are new to crude oil trading, WTI means West Texas Intermediate Weight crude oil, mostly from Texas and other states. Brent crude oil comes from the North Sea between Britain and Norway. Brent is always more expensive than WTI, mostly because of supply and demand issues based on logistics and the global popularity and ease of transportation of Brent crude. We talked about the price of gold last time, and we see price action at almost exactly $5,000 at the 50% Fibonacci level. We see support at the 38.2% Fib level, but regardless, we need to see a break above or below. We also see a flat MACD and an undecided stochastic oscillator, so the technicals aren't really helping us. For you Fibonacci fans, silver is looking identical in the technicals, and Fib levels are always quite important as well. Downward pressure on precious metals may come from the US dollar, which is getting stronger across the board. The Fed is hinting at an interest rate increase as inflation remains a problem, which will always bolster price action on any currency. Last time we looked at the cTrader MACD histogram. The MACD crossover is similar, and it is up to the individual trader to determine which one works for you. You will note that the red signal line is the same on both. Reversals can be spotted on both, with the signal line passing out of the histogram or crossing the MACD line. You will also note that the yellow MACD line corresponds with the peaks of the MACD histogram. So, this leaves the histogram on MACD crossover indicator, which reacts more quickly to bullish and bearish price action. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.